Hey everyone, RJ here. I've been investing full time for a very long time. However, I am not a financial advisor. This video is for educational and entertainment purposes only. Please do your own research before making any financial decisions. Here's the thing. SoFi's growth is something you don't see every day. We're talking about a company that's expanding faster than most can keep up with, and the numbers back it up. Just last quarter, they pulled off a 22% revenue growth year to year. Now, to put that into perspective, this is during a time when the market's been kind of rough, and they still managed to beat expectations. They even flipped their earnings from a loss of 6 cents per share to positive territory at 1 cent. Yeah, it's not a huge change, but going from negative to positive is a big deal, especially when you're growing this fast. Now, one of the things that has me most excited about SoFi is their ability to cross sell. This is where the real magic happens. Think about it. They built this huge customer base, and the more products they roll out, the more they can sell to the same people. SoFi's been positioning itself as this all in one financial service hub, right? You need a loan? They got it. Looking to refinance? They can handle that. Want to invest? Bank? Or even get insurance? They're setting up shop to do it all. The more they diversify their offerings, the stickier their customer base becomes. You sign up for one thing, and then you're like, well, might as well sign up for this too. Next thing you know, you're doing everything with SoFi. That's what cross selling is all about. But let's get real for a second. You might be thinking, all right, but isn't this risky? It's a risky time to be in growth stocks, right? Yes, September tends to be a shaky month for these kinds of plays. And sure, SoFi's stock price hasn't exactly been climbing nonstop. They've had a 9% drop in the last year and are down 20% year to date. But here's where things get interesting. This isn't just any growth stock. SoFi's valuation, when you really dig deep into it, is a steal compared to where it's headed. Their tangible book value, or TBV, is about 4.2 billion, and by the end of the year, they're expecting to hit 5.2 billion. With their current market cap around 8.5 billion, you're looking at a price to TBV ratio of about 1.63. Let me put that into perspective for you. JP Morgan's price to TBV is sitting at 2.45. Yeah, I know, comparing SoFi to JP Morgan might sound crazy, but hear me out. SoFi's growth trajectory is off the charts. You're looking at a company poised to grow revenue by double digits over the next decade, while JP Morgan is expected to grow at about the rate of inflation. So yeah, SoFi might be smaller, but they've got way more room to grow. Another thing to chew on, innovation. SoFi's not just resting on their laurels. They're constantly pushing out new products, and the management team's been laser focused on making sure they stay ahead of the curve. The fintech space is expected to hit 1.5 trillion by 2030, and SoFi is looking to take a big piece of that pie. This is why I'm so bullish. It's not about what they've done so far, it's about what they're setting themselves up to do. This company is investing in its future, and that's how you build sustainable shareholder value. But hey, let's not pretend there's no competition. The fintech space is crowded, and SoFi's got its fair share of heavyweights to contend with, from traditional banks like JP Morgan and Bank of America to other fintech companies like PayPal. But here's the thing, SoFi's carved out this niche as the one stop shop financial services. Like I said, they're not just doing one thing well, they're doing everything well. And that's why I'm confident they'll be able to fend off the competition. Some folks are worried about dilution. SoFi's been issuing more shares, and yeah, that's something you see with a lot of fast growing companies. But here's why I'm not too concerned. As they scale up and start pulling in more revenue, the need for dilution should slow down. They're already showing strong EPS growth, even with the share dilution. And as they continue to strengthen their financials, the dilution should ease up. One last thing, refinancing. This could be a massive growth driver for SoFi in the near future. With the Federal Reserve expected to start cutting rates in September and continuing throughout 2024 and 2025, a lot of folks who took out loans at higher interest rates are going to be looking to refinance. SoFi is in a perfect position to capitalize on this demand. Think about it. Their customer base has grown by over 40% year over year. That's a lot of potential refinances. So while personal loans have been driving a lot of their lending growth recently, I see a big shift coming where refinancing for home and student loans will start to pick up again. So where does this leave us? Well, from where I'm standing, SoFi is massively undervalued. The stock has about 49% upside potential based on their tangible book value alone. And when you factor in their growth potential and the cross selling ability, that number might even be conservative. Sure, the road might get a little bumpy in the short term. We could see a pullback in September, but long term, SoFi's got it all. They got all the ingredients to be a winner. If you're in it for the long haul, this is a stock you want in your portfolio, in my opinion. And look, I'm not saying there aren't any risks. Growth stocks are always volatile, and the competition isn't going anywhere, but the fundamentals here are just strong to ignore. So the bottom line is SoFi is a strong buy. The company's growth is undeniable. Their ability to cross sell is a game changer, and with interest rates expected to drop, the refinancing business is about to explode. If you're not paying attention to SoFi, you're going to be missing out. Trust me. That's it, guys. If you liked the video, please hit the like button and don't forget to check out my other videos.